was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something...
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is The Mortgage Messenger with host Jim Campanella. Welcome to The Mortgage Messenger. Today, we're going to continue our discussion on your credit profile or your credit report. Previously, in a different podcast, we discussed how to get your free credit report, your truly free credit report. If you have not done so, you may want to go back to our previous podcast, follow those instructions so that you can follow along here with us on how to read your credit report. If you've already done so, you'd want to grab it so we can go through it together. We'll continue the series about your credit profile and credit report beyond today, about credit scores and everything else. But today we're going to concentrate on how to read your credit report. Now, if you're interested in a more in-depth, with more information type of webinar, certainly please visit my website, www.mortgagemessenger.net/webinars. And there's a webinar that's ran on Thursdays and Saturdays, about 45 minutes long, that discusses credit scoring and how to improve your credit and the components of a credit score. Today we're just going to do a quick overview of how to read your report. So why don't we begin? When you get your report, as you should have by now if you've gone to a previous podcast and pulled it up, you can see a lot of information in there. The first thing it's going to have is information about you. It's going to be your name, your social, your date of birth, your address. There may be some misinformation in there, and certainly, if you want to clean it up, you can, but that's not affecting your score. So if it has a previous address, or I've seen it where the address happens to be your employer's address as a previous address, you can clean that all up, but that's not really affecting anything. Followed by the consumer information is your consumer statement, should you have a statement out there. You are allowed to put a statement out there so that anybody who pulls your credit can read it. So if you're a victim of identity fraud, or if you had something bad happen on your credit and you want everyone to know what it was and explain it, you can make a consumer statement right in that section. And that you would contact the 3 bureaus and make your statement. Beyond that, you've got your public record information. If you have a public record, that would include local, state, federal, tax liens, judgments, bankruptcies, anything like that. They would show up in that section, which is the public record information. Public records basically stay, well, as an example, with a bankruptcy, generally stand out there for about 10 years, 7 to 10 years. Even if it's paid off and settled, it still remains out there for a little period of time. If you chose to purchase your score, as previously disclosed in the other podcast, you're able to obtain your credit report for free. You don't get your score for free. So if you did purchase your score, that information would be there on your credit report. If you didn't purchase your score, that's okay too, of course. You don't need to. And certainly we're going to talk a lot more about your score in future podcasts. But that section would be right in the right after your public record. Then you actually get into the meat of your credit report, and that's the account history. It'll have things like the company name, your account number, the condition, whether it's open or closed, the type of account, whether it's revolving mortgage installment, responsibility, whether it's individual or joint, or you co-signed, when it was open, the high limit, the last reported, the balance, the payment, the past dues, and your rating. The rating system is on a 1 to 9, 1 being perfect, 9 being a charge-off. Obviously, you want a 1 as your rating system. So if it's like an R1, that would show revolving perfect pay, or pays as agreed. M1 would be mortgage. Those are the things you want to be looking at. You want to look at your past due balances, if there are any, your payment history, to see how many they're reporting as 30 days, 60 days, or 90 days. If none are showing up, that's a very good thing. You've got good credit. If something's showing up, you want to verify whether it's accurate, because it could be showing you 30 days late, and maybe you weren't 30 days late. Beyond that, you've got your inquiries section. Now there's two types of inquiries, the hard inquiry and the soft inquiry. Soft inquiries are like when you pulled your credit report. It doesn't count against your score. It's a soft inquiry. When your credit is pulled for marketing purposes, let's say you have a Discover card, and Discover pulls your credit because they want to extend your credit and give you more credit, that doesn't count against you. That's a marketing inquiry. Those are considered soft inquiries, nothing against you. A hard inquiry is when you've actually applied for credit and you're trying to obtain credit. And even those vary on how they affect you. A lot of people run around saying, I don't want my credit pulled because it's going to affect my credit. And it can, but it doesn't affect it the way people think. Two things that go with hard inquiries. Three things go with hard inquiries. Number one, new credit or inquiries only affect 10% of your credit score. So the whole basis of your score, only 10% of that is related to obtaining new credit, which is your inquiries. That's one thing to keep in mind. Number two, let's say you're out buying a car, and you went to Ford, and then you went to Chrysler, and then you went to Hyundai, and then to Honda, and everything else, and they all pulled your credit. Those are not counting against you if they're all done within a 30-day period. If auto loans and mortgage loans, if they're done in a 30-day period, only count as one inquiry. So, and the reason for that is, of course, in case you're shopping for a car or shopping for a mortgage. Now, if they pull an inquiry against you after 30 days, as an example, you're doing a mortgage through us, and then 30 days later you apply somewhere else, that'll count against you as two inquiries. But if it's in a 30-day period, that's one inquiry. All other credit, like revolving charges and so on and so forth, are within a 14-day period. So if you went out and applied for 3 or 4 credit cards to build your credit, and they pulled it within a 14-day period, it's supposed to count as one inquiry. So you could have 30 inquiries within 14 days, and it's really counting as one. So it's a little bit of a misnomer about inquiries. One, it doesn't really count much against your score. That's number one. It does count against your score, but not by much. And two, if you're out there buying a car or trying to get a mortgage, they do anticipate you having inquiries pulled against you. So that basically explains what your credit report looks like that you should have obtained from the 3 bureaus. If you've not obtained them, again, go to our previous podcast or go to our website, www.mortgagemessenger.net, and you'll find information on how to obtain your credit report under useful resources. Again, I do want to promote the fact that we have that 45-minute webinar coming up on Thursdays and Saturdays, talking about what goes into the calculation of your credit score and how to improve your credit score. You're under no obligation. They're completely free. I mean, you are committing 45 minutes of your time, but outside of that, they're completely free. You have no obligation to utilize any service. We're not trying to sell anything, just trying to help you with the information of improving your credit score. Coming up in future podcasts, we're going to go into a little bit more about the credit score, what the components are, and how to understand the three credit scores that are out there. So until next time, thank you for viewing.
I can't forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.